Good day Forex trader. Your USD Forex signal, weekly bearish despite strong euro. The US dollar continues to advance on rising yields. My previous Euro USD signal on April 11th was not triggered, as unfortunately the price did not quite reach the nearest resistance level which I had identified at $1.0937. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.0831 or $1.0937. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.0710 or $1.0639. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote on April 11th that despite the price's inability to break down, the long-term outlook was bearish, and the trend was clearly downwards, so short trades from clear bearish reversals at $1.0937 continued to look attractive. This was a good call as the price peaked that day close to $1.0937 and has drifted lower since then. US dollar strength has been the standout feature of the Forex market over the past several months, and the pace of the dollar's advance has picked up over recent days. However, although the euro is weak, it will not fall strongly, but just continues to drift lower against the greenback and is prone to sudden bullish retracements. This can make this currency pair challenging to trade short. Yesterday's clear victory by sitting French President Emmanuel Macron has boosted the euro as markets have opened this week, but as the dollar remains relatively strong, we do not see the euro able to rise much here, and in recent hours it has begun falling again. The recent low at $1.0758 is well within sight, and this is now a near 2-year low. Scalpers may be interested in trying to take a long trade from a bounce at $1.0710 if it is reached quickly, but trading with the trend will definitely mean a short trade here. As there tend to be such deep bullish retracements, waiting for a rise to $1.0831 followed by a bearish reversal will probably be the best approach for trading short here today. Trading this pair short on breakdowns is not advised in the current climate, as the bearish trend is simply moving too slowly. Gbp Usd Forex signal, break and retest expected. The pair will likely retest the important resistance level at 1.300 and then resume the bearish trend in the coming days. Bullish view. Buy the Gbp USD and set a take profit at 1.3000. Add a stop loss at 1.2800. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.2830 and a take profit at 1.2750. Add a stop loss at 1.2900. The Gbp USD sunk to the lowest level since September 2020 as investors predicted that the Bank of England, BO, will be more cautious in the coming months. The pair dropped to 1.2838, which was about 10% below the highest level last year. BO to be dovish? The Bank of England has become one of the most hawkish central banks in the developed world. The bank started hiking interest rates in its December meeting. It then continued its rate hike cycle in February and in March and then hinted that it will continue with the pace in the coming months. The purpose of doing this is to lower the rising inflation rate. However, there are risks that hiking interest rates so fast will have an impact on the UK economy. Data published on Friday revealed that the country's retail sales declined sharply in March. Precisely, the headline sales declined by 1.4% in March while core sales fell by 0.6%. On a year-on-year basis, sales rose by 0.9% while core sales fell 0.6%. Notably, online sales crashed by over 26%. Another notable data by GfK showed that the UK consumer confidence continued dropping in April. It has dropped in the past 4 straight months. Therefore, there are concerns that the UK economy will slow down as inflation rises, which will push the Bank of England to slow the pace of rate hikes. If this happens, it means that the BoE and the Federal Reserve will start diverging. For one, in a statement last week, Jerome Powell said that the bank was committed to hiking interest rates gradually. He also hinted that the bank will also start reducing its balance sheet. His statement mirrored that of Mary Daly, a dovish Fed official, who said that the bank should move quickly. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair moved below the key support level at 1.300. This was an important psychological level and also the lowest it has been since March. It also moved below the 25-day and 50-day moving averages while the stochastic oscillator and the relative strength index, RSI, moved below the oversold level. Therefore, the pair will likely retest the important resistance level at 1.300 and then resume the bearish trend in the coming days. Aud USD Forex signal, relief rally expected in the near term. While the overall trend is bearish, a relief rally is expected to happen in the near term. Bullish view. Buy the Aud USD and set a take profit at 0.7300. Add a stop loss at 0.7150. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7220 and a take profit at 0.7150. Add a stop loss at 0.7300. The AUD USD slipped to the lowest level since March 16 as the US dollar rally continued amid fears of a more hawkish Federal Reserve. The pair is trading at 0.7245, which is about 5.5% below the highest level this week. Australian dollar pressured. The Aussie has been under intense pressure in the past few weeks for a number of reasons. First, after soaring during the start of the Russian invasion of Ukraine, commodity prices have cooled a bit recently. The Bloomberg Commodity Index has dropped by more than 5% from its highest level in April this year. This is notable since the Australian dollar is often seen as a leading commodity currency. Second, the US dollar has been in a strong bullish trend in the past few days. The dollar index, which tracks the greenback against a basket of currencies, has jumped to the highest level since 2020. This rally accelerated last week after Jerome Powell hinted that the Fed will be more aggressive in the coming months. Now, analysts expect that the Fed will deliver a 0.5% rate hike in May and then start its quantitative tightening, QT, policy. Third, the AUD-USD pair has retreated as investors eye the upcoming Australian election. It will pit Scott Morrison and Andrew Albanese of the Labour Party. While most analysts expect that Scott Morrison will win his second term, most of them believe that the election will be close. Still, it is unclear how these results will impact the Australian dollar. This week, the Australian dollar will react to the latest inflation data scheduled for Wednesday. Analysts expect these numbers to show that inflation rose from 3.5% in Q4 to 4.6% in Q1 of this year as energy prices rise. On a QoQ basis, they expect that the CPI rose from 1.3% to 1.7%. AUD-USD forecast. The AUD-USD pair has been in a strong bearish trend in the past few days. On the 4-hour chart, the pair's Bollinger Bands have widened, signaling that there is intense volatility. At the same time, the Relative Strength Index, RSI, has moved to the oversold level and is still pointing downwards. The stochastic oscillator has also moved to the oversold level. Therefore, while the overall trend is bearish, a relief rally is expected to happen in the near term. If this happens, the next key resistance level to watch will be at 0.7300.